What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. The Weekly Watchlist comes out every Sunday to give you an edge for the week ahead. As always, we're going to be doing a technical analysis on 8 tickers that I consider have some of the most liquid options chains. So on the left here, you'll see we have SPY, the Qs, Apple, Netflix, Tesla, Alibaba, Facebook, and NVDA. If you'd like to see anything added to this list, feel free to let me know down below in the comments section or shoot me an email, whatever you prefer. As always, if you'd like to skip around, go ahead and go into the description of the video and find the timestamp of the ticker you're interested in and just skip ahead that way. One thing I would like to point out is I do understand these videos get a little long and my voice is pretty boring, so if you'd like to just make this go by twice as fast, you still find the information valuable, go ahead and change the speed down here on YouTube. That's a little gear, and then come on over to speed and change it to 2. Alrighty, so as always, we're going to be starting with SPY, and I would like to point out, if you come up here and take a look, we are on the daily chart, just to point out some levels of support and resistance. They might make a little bit more sense on this chart than the 4-hour, but we'll get to the 4-hour eventually. So I would say, obviously we had Thanksgiving week, the market was shortened, the trading week was shortened there, 4-day trading week, and then Friday, obviously very, very low volume, people, out enjoying the holiday and not necessarily spending time on the markets. Anyways, just look at the week structure of that candle there. If we zoom in a little bit, we could see it a little bit better. Almost no body to it and a big upward wick. So that would imply, at least to me, that come Monday we will see some selling and probably test out our very critical decision point here right around the 260 mark. I would say Monday we're going to come down, sell, and then it's going to figure out this area, which way it goes. Now that's anyone's guess, but we can look at some supports and resistances to see what may happen if we do break through or bounce off. So if we break through, this white line is obviously next, and that's an important one based on February. So if we look at February's initial sell-off, things sort of started to slow down around here, right around that 257.50 area, I would call it. And then over here you can see a ton of data points sort of finding a base here before the market really started to push upwards again. Pay attention to the white line after the 260 level. And then below that we have 254, which comes into play based on some of these lows down here. I would say even the lower wick of this candle here. So that's what we have below us. Above us, obviously we have quite a bit of ways to fight. I would say this area has acted as a bit of resistance just based on these 2 upper wicks. So we can draw that in there. That's right around 267.36. Wouldn't hold it to the exact penny there, but just in this general area you can see it was support here. And then obviously acted as resistance there. So that would be a resistance immediately on the way up. Further than that, we have this level here, which is based on these supports. That is right around 270.33, and after that, sort of coinciding here with our 200 SMA, the 275 whole dollar mark. That's a really critical one. If we are going to start rallying higher, it would be important to get above that, and then obviously these 2 highs up here. But quite a ways to go before these highs come into play, and that 200, there's a bit of battling that needs to go on. Obviously this area I think is going to come into play first, so let's just wait and react to that appropriately instead of anticipating and being completely wrong. So that's what I would say on SPY. Up next we have the Qs. We're not going to spend a whole lot of time on this one just because of how long we spent with SPY, but you can see we're starting to fall to the outside or downside of our symmetrical triangle here, and below us we have some critical supports based on some of these lows back here. If we scroll back, the low from the beginning of the channel rally, and then further than that, the low before that, the prior low, which is at 153.88. We're sort of approaching that zone. So right now I would say, based on falling out of here, the back test failing, here I would say it does look like we're more than likely to come down, test this level. If that one gives, obviously the next one below that. And I would imagine a small bounce might happen here, but I wouldn't put a ton of money on the line just because if this gives, things could get really bloody really quick, and that's going to wrap up Qs. So next up we have Apple, and I flipped Apple over to the daily chart again, just because I feel like the move is so aggressive to look at on the 4-hour chart. We can't really get a view of what's been going on in the past. So obviously we've seen almost 100%, or actually a 100% retracement on this move on Apple, and we're back below the 200 SMA. On the last time I was talking about if we could get above this, things might start to look a little bit better, but obviously a massive gap down here, and we're getting really overextended to the downside. So what I would imagine on Apple is we're going to find a support somewhere, Let's again scrunch up the chart and see if we can find anything here. So if we draw out from this gap here, you can see we have a price level at 169.57. That's where this gap would be closed. So if we come back on over to our price action, zoom in a little bit, you can see we're almost there. I would say come Monday, if we continue to fall and get down into this level, it would present a nice opportunity for a small day trade bounce. I'm not saying a full reversal of this downwards trend at all. I'm just talking about a small day trading bounce. So think of that possibly coming into play on Monday. If we can continue to get overextended to the downside, that next support should offer a little bit of a bounce, again, intraday. Not saying it's going to reverse the trend at all, but that is a support below us. Anything after that, below that gap level, I would just say down here at this support level, that seems to be right around 160. So again, a ways to fall again if we break through this and can't hold there, a way to go. And again, just going to get really overextended if in the next week we end up down at 160. So I would expect a bounce or some sort of pullback, if you will, in the opposite direction on Apple this upcoming week if we can continue to get overextended. And like I said, might cause a nice little intraday little bounce there. Definitely tradable. So that's what I would watch for on Apple. Some of our beautiful supports and resistances that we had on the 4-hour chart, I've gotten rid of those based on our daily chart. They're no longer relevant. Consider we've broken out of our consolidation phase, obviously to the downside, but we can draw in our major resistances. We have obviously the high there. I would call this area of really thick support. It's going to act as a resistance on the way back up, and then from there we have some things drawn in. So that's what I have on Apple. Alright, so now we're looking at Netflix, and I just think it's incredible how this drawing sort of held up here. The drawing I drew came right back down to this 250 area, and obviously the price came well within right to where the drawing went, so just kind of funny how that works. And now it doesn't look like the inverse head and shoulders is going to hold up based on this daily candle. Again, it was a Friday after a holiday, so it's kind of a sketchy candle to base a judgment off of, but the candle itself does not imply a bounce in the upwards direction. If anything, it implies selling, in which case the inverse head and shoulders would potentially fail unless it were to be drawn out a little bit longer. So right now we can draw in a new support right around this level, right around our low here. And again, we're still on the daily chart. I haven't flipped over from Apple. We're still on the daily chart. And yeah, other than that, we don't really have much holding us up below. I am going to scrunch up the chart and search for something for you guys, see if we can find anything. If you just look at where the cursor lines up, I'm telling you guys, charts, it's just incredible how accurate they are. Look at where these lows are here, and look where the price just happened to run out of steam last week. So pretty cool how that works, but the gap fill below is right around 227.06. You can see over here there's a big gap in the chart. We gapped up and went on this crazy run throughout the year, and now it looks like we could potentially come back down and fill that gap. So that's about, let's see, a little bit, just over a $20 gap below. So the price could come down here and fill the gap. It could not, who knows, but that's what we have here on Netflix. That's our next sort of major support there. So if it does get down here, certainly a bounce in the upwards direction, but if it doesn't, we could just kind of go sideways throughout this and not really pick a direction until the market really decides. Or we could try to battle up through some of these pretty strong resistances here and form our inverse head and shoulders, in which case we talked about the break of the neckline to get back in on the upwards move. That's all we have for Netflix at the moment. The moving averages are kind of out of the way right now, so I wouldn't put too much into them. Are sitting at the lower Bollinger Band on the daily, so again, if we get overextended to the downside, you could look for those intraday bounces. Alrighty, now Tesla. We're back on the 4-hour chart. So we did have our fib extensions drawn in here, and you can see we sort of moved to the upside, found look at that beautiful inverse hammer there right off that resistance. Anyways, falling back down and possibly coming into our 0% fib extension, which is just essentially the low from that first pullback. You can see the price is running out of steam right where we drew our line from. That's actually an older line. Perfect. Look at that. Price running out of steam right at that line, but I would imagine price could potentially come back down to this low before it does decide to bounce. Tesla is really tough to gauge right now. based on the way it's behaved as the market has done the complete opposite. Market has tanked. Tesla has gone on a nice little run here. So again, not going to say which direction Tesla is going to move, but we do have our lines mapped out for us. I would expect, again, a small bounce around this area intraday. But again, if that fails, we could just see a complete rollover back down to maybe our 200 SMA here on the 4-hour chart. That's going to come down into play right around 309.50. That's where it's sitting now. Obviously, that can change. But we do have a support below us down here at 307.60. That comes into play based on some those pretty historic values here. We have some lows and highs, and it's sort of been respected a little bit here. We saw that double top sell-off craziness there. But that is a level to pay attention to next on Tesla. That's 307.60. Alibaba here does look like it's trying to hang on to this support trend line. So we're going to leave it for now, but you can see we dipped below it and then gapped up above it here for this would be Wednesday and Friday there. So we're back up above it, so I'm going to leave it in play for now, but it's been broken. I would say it's a damaged trend line at this point, and we shouldn't put too much emphasis into it, but you can see we're right at a resistance there, sort of getting battered down each time, gapped down, and then fought our way back up. Now we're just kind of going sideways right around this level. What's going to be key for BABA in the coming week is to break above and maintain this trend line. If we can do that, then we're in shape to possibly reattempt a high here and reattempt a high here. Those are drawn in for us by these two red lines there. And I would say that is critical on BABA if we're going to move in the upwards direction. If this trend line fails, our last ditch effort would be the 50, as it was sort of, where the gap down sort of stopped. So I would imagine the 50 would act as support, sort of coinciding with that 145.67 level. Anything below that, it does look like it could continue to roll over to the downside a little bit. Again, kind of a weird chart on BABA. 4-hour, just not as smooth as it could have been, but going sideways, no clear trend. Obviously, our 200 is sloping down. 50 is kind of going sideways at this point, so trend isn't really clear. That's not really helping us out much, but again, like I said, if we break out above this level, we have these two key highs to break above if we're going to continue in the upwards direction. But if we break down below it, looking first for the 50 SMA and this 145.67 level to act as support. If that gives, coming back down here, I'd say to 140.11. Facebook, another one that's getting pretty bearish. We're down in sort of no man's land. We're below some of our key supports here. And right now, it looks like we're going to have to scrunch the chart up. Alrighty, so I hope you could see me draw those two support lines in on the daily chart there. There was a gap there, so there's a gap between 127.16 and 124.42. We gapped up from this level to here. Obviously, this acted as a beautiful support. I was scrolled way back in the chart history, and just look at how beautifully that lines up. Guys, charts do work. And then we came back up, again, rejected by the back test as we were on the Qs, I'm pretty sure it was, and it does look like we're geared up to move lower. I would say we're going to come back down and at least test the 127.16 again, and after that, complete the gap fill at 124.42. So that's pretty much what I have on Facebook. The trend is pretty bearish based on, falling below this golden level here. It just looks like the selling wants to continue at this point. Alright, so lastly we have NVDA, and we talked about last week this surprising gap I sort of missed here, but we're obviously below it, got overextended this day, and you can see we rallied upwards a little bit, so there's a bit of support trying to build here. I'm going to go ahead and put in a support line here from where we rallied after that bit of a gap down that morning. That's at 133.13, and we're sort of going sideways right now. It seems like there's a decent amount of support at 142.88, 142.90, right around this area there. So just a little bit of a move of the cursor, and it's now saying 143.33. So right around this level, just visually, there is a bit of support being put in on the 4-hour chart. We're going to scrunch it up and see if we can find anything, or if anything coincides, so bear with me here. So again, we had to move on to the 3-year daily chart to find some data points here. This support is sort of what I drew in as one of them. Obviously, it's slicing right through our candle there and not really holding too much significance now, so I'm going to go ahead and get rid of that one. So we'll remove that one, but this one comes from a pretty important double top in the past, so we're going to leave that one be. This is below us again, so we would like to see it act as support if we do decide to come down and violate our low from here. If we do, obviously overextended again in the downwards direction, expecting an intraday bounce off of both of these supports if we do decide to come down and get these. But again, not looking for a trend reversal of any kind at this point. That would be outrageous to expect a trend reversal off of this immediately. Our 50 and 200 SMAs are starting to curl in the downwards direction. Trend is obviously bearish in the recent history here, so I wouldn't expect, like I said, a major bounce, load up the boat here on cheap NVDA. No, rather wait for it to play out, but do expect those intraday bounces and scalps to occur at these levels, 133.13 or whatever the low of this candle is. And again, based on this double top right around 120, we'll call it, from in the past, we'll just scroll back to take a look at it. I'm drawing that off of these two highs here. So that's right around 120. Alrighty, so that's going to wrap things up for this week's episode of the Weekly Watch List. If you made it this far, I would like to thank you. Obviously, you have an interest in the stock market and trading in general, so I'd encourage you to head on over to the channel, hit the subscribe button. I'm sure you'd like some of the other content that I have to offer. If you'd like to see anything else added to the watch list, let me know in the comments section or shoot me an email. If you think I missed anything in my analysis, let me know. We can certainly discuss it. And as always, I wish you a green trading week in the week ahead. And don't forget, you can speed up these videos to get through them quicker by changing the speed to 2 over here. I feel bad for making these, 15, 20-minute videos, but do know you can speed them up and get through them quicker while retaining the value. So again, have a good trading week, and I'll see you in the next one.